How's it going, everyone? It's Sam. Today is a rough day so far in the market. The pre-market is absolutely bloody. You can see here, these are the 90 stocks or so that I follow. And if we look, barely any of them are green. Not one is actually green here, which is amazing. I mean, not in a good way either. Of course, I don't follow too many blue chip stocks, but the whole market in growth and momentum is red. I want to talk about why that is, what's happening, what we can do, gearing up for the future, all that kind of stuff, and explain just for everyone that might not know what's happening right now. We're going to talk about what is going on. So I apologize if I'm being a little bit quiet. People are still sleeping here, but I want to dig into this. Now, if you guys don't mind just hitting the like button, I really appreciate that. That really helps out the channel. Also, if you guys want, there is a link down there to Webull. Just deposit $5 on their platform and you can get 2 free stocks. So we can see that over the last couple days, the indexes have actually been doing fairly well, but growth stocks have been hit really hard. I mean, we can go through the list here. We have some stocks that are down 3%, some that are down 4 or 5 or 6, all the way down to negative 10% for AMC. Some of these retail favorites, some of the higher risk stocks are getting smashed. Stocks like CCIV, which doesn't even have a product yet, Workhorse, which barely has a product, AMC, which is in most people's views severely overvalued. There's something else going on there with the whole retail movement, but still overvalued. BNGO, which is very hard to value, is down 7%. We have a lot of stocks that are smashed right now, and we have some stocks that aren't getting hit as hard. I mean, you can look at Corsair Gaming, which is down 4%, or Etsy, which is a much larger company than some of these, and they're down 3.5%. Tesla down a couple percent, Walt Disney down only 1.6%. So what is happening right now? So we have this article that's up on Market Watch today basically saying, hey, there are people that are really worried about stimulus being gone next year. So they are slumping, the futures are slumping because people don't know where all this money is going to come from that's going into the stock market. We also have the Fed minutes yesterday, and there's split ideas on quantitative easing and what they should do moving forward. Some people said that they hadn't seen further substantial progress, but some people think that it would make sense to start tapering sooner rather than later. So we're getting a lot of mixed reviews here, and I actually did a full video on that yesterday if you want to check it out, and kind of going over exactly what they said. So once they start tapering, people will be very worried, right? And some people are saying, or some people in the Fed were saying, maybe we'll see rate hikes as early as 2022, which is really only a year and a couple months away. So we're seeing that. In addition to that, we are seeing just people looking for more risk-off assets as they're not sure where we're going moving forward from here, right? We have these new indicators. I did a full video on it yesterday showing that more companies are losing money than gaining money out of the companies that are offering secondary share offerings. So this was an indicator in 2000 and then also 2008 that we go into negatives, where more companies that are negative cash flow, negative earnings are actually having secondary share offerings. So this was an indicator before. Some people are looking at it now saying that, hey, the stock market's going to crash. Now, we also have crypto that's actually falling a good amount too today, 6 to 9% on some of these cryptos. Now, obviously, the ones at the top don't fluctuate as much as the ones at the bottom, but there's a lot of fluctuation. For me, I think cryptos are falling because the stock market's falling. People are looking to get out of riskier assets, and because market manipulators like to take advantage of stuff like this in the stock market just to be able to push down the price a little bit more. So it could be one or the other or both. So that's just something that I'm noticing. So what can we do? What can we do to make money? What can we do to save ourselves? Okay, so obviously there's 2 scenarios here. Either the stock market goes back up because people realize, hey, these are the companies that are going to grow the most in the coming years, these are the ones that are going to outperform the general stock market. Or people say, no, these are too risky, right? We're moving into a period of uncertain time, uncertain growth. The job unemployment is still very high. And they say, no, I'm going to invest in some of the indexes. I'm going to invest in real estate. I'm going to invest in REITs. I'm going to invest in some of these larger companies like Facebook, Microsoft, Google. Well, I've been adding some of those to myself over the last couple months. I've been adding Walt Disney over the last year or two, JP Morgan too, but that's more for me, for my own risk tolerance. So I've been talking about that on the channel and in the Patreon. So I like those because they still have pretty good growth, but I'm still going to be adding to some of these other positions. So what I think you can do here, and of course I'm not a financial advisor, do your own research. I think you can look for key levels of support. So obviously that might seem like something that you would do anyways, but look for key areas of support that we saw maybe around May, right? May 15, where we really saw that dip in the market, maybe after that at different points or before that slightly, because traders will be looking for that. There are certain levels that people will buy at, and look for those key areas of support. If we get down to there, I always like to nibble a little bit, but I like keeping more cash on the sidelines. I've been buying every couple days for months and months and months, but I'm going to continue to do that. Now, if we see dips, I'm going to buy heavier. If we saw more dips, I'm going to buy heavier. I like Tattooed Chef at $19. I like it a lot. I bought it at $21. I bought it at $16. So I'm going to continue to add on the dips, buy as it goes down. Maybe, even write out what your game plan is going to be. Now, there are some plays that are kind of arbitrage plays. If there are SPACs that you like that are far away from merging, I've done this before, putting money into a $10 or $9.90 SPAC that I liked, thinking that if the market turns around, then that's awesome. But if the market keeps on falling, you can almost use it as gunpowder. Now, I don't see as many of those on the market right now. I think a lot of really good SPACs that I liked have gone through and merged. But if you're up with the SPACs and you're paying attention, you can probably find something. In addition to that, we can look at some other plays like NNDM, which is still a very high risk stock. But if we take a look at it here, we can pull it up, and their cash value is near what their stock value is. So their market cap right now, 1.76. I'm not sure if this is during the pre-market with the down 5% or not, but it's 1.76. They have around 1.4 to 1.5 billion in cash. So once this thing starts falling down to $5, $5.50, I picked up long-term call options on it last time, and it shot right back up. We usually see this where it shoots back up after hitting that level. So you can see here, just shot back up to 630. I sold it. There's really no reason for it to be in this range because, again, the cash value is much too high. So if it falls back down, I'll be picking up call options on it. Easy decision in my mind. Now, of course, there's several different things that could happen. It's not just all money, right? There's always risk to it, but risk reward wise, I think that's a pretty good bet. Now, I don't really love the company long term, but right there, that's an arbitrage play, a great play in my opinion. Now, of course, do all your own research. I'm not here telling you what to do. I can't do that, but thank you guys so much for watching. Let me know your thoughts down below. Thank you, and thank you for hitting the like button and checking out the link down below to Webull. If you guys want, there's a link down there to BlockFi where you can get an interest rate on your crypto, a bonus, and you can actually get their new Bitcoin back rewards card that gives you boosts on stablecoin and gives you a boost 1.5% back in Bitcoin. So definitely check that out down below. Thank you guys, and I'll see you in the next one. Bye.